But now, in this very difficult time where they increase it so fast in the history of America, no one saw this. Okay, they're sitting there and see COVID-19, and they did not see the rise in interest rates so quickly, which effectively hurted the economy and many commercial real estate owners.
Tim is one of the most authentic and genuine people I've ever met.
Sincerely believe he's coming from a position of giving, and that means a lot.
You're going to make huge progress.
Hello, everybody. Welcome to today's Capital Raising Show. I'm your host, Tim Mai, and today I have an awesome guest on the line with us today. And I've gotten to know Jonathan through a number of events. And this past weekend, him and I were together at Michael Blanc's Dealmaker event. And so we get to talk a little bit further, and I get to hear his stories more and get to hear how he operates his deals and the level in which he goes into managing his properties, his assets, and how he takes care of his passive investors. I got super interested in that. And so I asked him to be on this interview today. And so super cool, looking forward for you guys to get to learn from him. A little bit about Jonathan. Jonathan is a CPA and who started his real estate experience since 2003. He purchased a portfolio of residential real estate properties in New Jersey, and then later on expanded into syndications in multifamily and self-storage. And that started about 5 years ago. Is that correct, Jonathan?
Yes, that's correct.
Yes. And then so within the last 5 years, Jonathan and his team acquired over 2,000 units of commercial real estate assets located in Charlotte, Midland, Odessa area, Austin, Texas, Oklahoma City, Atlanta, Midway, Birmingham. And in addition to being a full-time real estate investor, Jonathan is also the host of a podcast host called Building Wealth in Commercial Real Estate. So with that, let's give Jonathan a big welcome, y'all. Hoo-hoo!
Thank
Awesome.
you. Thank you all. Thank you.
Yeah. So Jonathan, share with us. Let's go into what had you go from single family home over to syndication. What got you interested in that?
So at the time, I was working as a tax director. My career was accounting. I got my degree in accounting from the University of New Jersey, and I got my certified public accountant license. So I worked for a public accountant like PricewaterhouseCoopers. And I was working in the private equity world for BlackRock, and I also worked for banks like Credit Suisse, First Boston. And at the time, I focused on more on the banking side because I like the banking and giving advisory and taxation. Then as I rose through the ranks, I became head of tax, and I managed a large organization in this French bank called Société Générale. And then from that time, I realized that this wasn't my passion, even though I was making great money, but it wasn't really something that I was passionate about. So I decided to take a big change in my life, and I said, you know what, I'm gonna focus on something that I really love, and something that I'm gonna have to scale where I can have enough money to offset my large salary as a tax director. So that's what made me change and got into multifamily.
Gotcha. Do you still work a W-2 job now, or have you gone full-time now?
No, I left last year and I work full-time now. Yes.
Awesome. Yeah, I share with us a little bit about your because you started out with single family, and I guess that wasn't able to were you not able to scale that enough to be able to achieve what you wanted to achieve, I guess, now in the syndication space?
Yeah, so when I grew up in New Jersey and I had to buy local so I can self-manage it. I used to watch YouTube videos and I used to learn how to fix things myself where I can do it to save money. And what I realized was in New Jersey, the taxes are very high in New Jersey. So when I bought the first one, I collected a portfolio of 3 residential properties around Princeton area, and I have one by my house in West New York, New Jersey, which is near like Hoboken, New Jersey. And what I realized was being a landlord and having these residential wasn't enough power to leave my day job. And as I got more senior into my role and became being the number one guy in tax, I realized that there's no way for me to leave my job making this kind of salary and having so little income from my residential properties. So I said, it has to be a way for me to scale so I can really leave my job and leave this banking world so I could have ability to build a legacy for myself. And that's where I came upon Michael Blanc, who became my mentor. And I got his SDA, and I started underwriting because I'm a tax. I like Excel, and I'm a tax person. And I really liked it, and I just joined his mentorship program. That's how in 2018, that's how I got started.
Gotcha. Okay, and then I know that the bulk of the deals that you do are multifamily, but you also do some self-storage. Give us a percentage split between those two asset types.
Right now, it's like half and half.
Oh, okay.
Recently, it's half and half because recently I closed last week on a 94 unit Class A deal in Columbus, Ohio. That's closed. So it's like half and half, basically.
Gotcha. Have you, when you first started, that was just multifamily, is that correct? And then you started to expand into self-storage?
Yeah, so I was taught multifamily by Michael Blanc, financial freedom through multifamily. So I invested in this deal as LP first, and I started raising capital, and I started leading my deals. So normally I lead my deals normally. And I learned so much from doing, now it's probably like my 10th deal as a lead GP. So I learned so much in multifamily world and from self-storage world that I understand what's the issues to watch out for and how to correct it really fast, basically.
Gotcha. And what had you expanded into the self-storage for?
So during COVID-19, it was a very competitive market, especially here where I live in Dallas, Austin, Houston. It was a very competitive market. We couldn't get best and final on some of these deals because everyone was paying top dollar. And I wasn't willing to pay top dollar for something that I knew could be a little less than that. So I decided to pivot into a different asset class to get the syndication and get cash flow from another asset class where I can diversify and not just on multifamily. So I went into self-storage. I spent 6 months studying it very deeply, the vertical. And I had actually a partner who was mentored by a kind of guru in that space. And he taught me everything he knew. And that's how I got into self-storage, and I acquired like around over 1,000 units in a year or so. And I know how to run and operate a self-storage now.
Gotcha. Your internet is breaking in and out on us. I was able to hear you, but I think for the audio, we might end up having some challenges. But I don't know, is there anything you can quickly do anything about?
I don't know. I think I can hear myself. Is it
Okay.
breaking in and out? Okay.
Yeah. All right. That's fine. We'll proceed, and hopefully it won't be an issue. Okay. Yeah. So let's talk about capital raising, especially coming from someone who's a CPA, started out as an LP. How do you look at capital raising, if you look at capital raising differently from what other GPs out there look at it?
Capital raising, when I first started, was obviously family and friends, just like most people start off with. And then what happened was I built strategic relationships over time. And I was able to build a team that can help me scale and help me raise capital.
About capital raising, coming from being a CPA, starting as an LP, how do you look at capital raising? Yeah, let's start with that.
Yeah, so when I started from the humble beginnings, my first deal, I reached out to my family and friends, and they were supportive. And they were bulk of my equity because they believed in me because I was very successful in my accounting career. I had a master in taxation, climbed through ranks as the tax director. So they saw that if I put my mind to it, I can reach up to the top. And I told them that my goal is to scale and be the best operator in town and protect my passive investors so we can give you a good return through. So I call myself a private equity. Like when I worked for BlackRock, I was a tax advisor talking about taxes and how you minimize tax for billion-dollar companies. So I said, I'm a private real estate firm. So I call my firm Greystone Capital Group, which emulates kind of BlackRock, Blackstone from New York City. Yes. So I say I invest in commercial real estate, not just multifamily. I invest, it could be self-storage, multifamily, it's in generalized terms. So I'm a commercial real estate private equity firm. And then how I raised capital was initially through families. And then over time, I built relationships strategically with people who raises capital specifically, and through the Michael Blanc network. And that network gave me the ability to raise significant capital. And now I'm at a point where we are talking to some institutional capital and also some family offices where we can draw from that as well. So that's how I grew my base from family and friends into a network of capital raisers. and also now a more institutional family office space.
Gotcha. Okay. What about from your previous work as a CPA? Were you able to raise a lot of money from like your past co-workers and work associates?
Yeah, I'll tell you a funny story. When I was tax director here in Dallas for a IT firm, I had a new staff, and when I came in, I said, Martin, I do real estate on the side. Would you want to take a look at it? He said, sure, I'd love to take a look at it. And he drove by the apartment in Oklahoma City. He said, yeah, I'll invest 50,000 in your deal. I like your deal, and I believe in you, basically. That's why, because I was his boss. And then so he invested 50,000. And then some of my other coworkers who had 401k and stuff like that IRA, they invested like 50,000, 100,000. So I got a couple of folks from my accounting world. And over time, what happens is that if you succeed over time, they're gonna repeat customers and referrals will grow. So
Gotcha. So let's talk about that, you know, how, because I know you mentioned to me when we were talking there in Dallas about how you have investors like waiting for your next deal just to invest because of how well you take care of them. So let's give us some insight, some examples into how you cultivate the relationship, not just before they invest with you, but after they invest with you even.
Yeah, so I'll give you some examples. Like my neighbor here who lives here in Dallas, he has his own online company. He's very passionate like me. We talk late at night about how to help each other building the business, like a Tesla culture where, Elon Musk is a visionary. We said we have to get traction. So that's a book I recommend you guys read, Traction, EOS. And how do you build a business and scale and grow sustainable? And how do you reach the top? And we talk about this all the time. And I said, I'm building my real estate business. He's building his online business for construction. And when I first showed him the first deal, my first building in Oklahoma City, it was a fixed 6 unit, Class C value add, traditional Class C value add. He looked at it, he said, you know what, this is very interesting. I'm gonna have my lawyer look at it and see what they think. Then afterwards, he said, yes, I'm gonna invest $50,000. And then like in 2 years or so, I sold, I made more than, I think, double his money. He was really excited, he was really happy. He goes, you know what, I really like your deals. I'm gonna invest another 100,000. And then he invested every single deal I had. I think this is my 9th deal. He put every time he put money into my deals. So I got a repeat investor. That's one of them who actually invited me to lunch and say, Jonathan, do you have a deal for me? I want to put money in your deal. And I said, right now I'm very busy. I don't have no deals right now. So that's what I told him.
Nice. That's
Yes.
awesome. That's awesome. Yeah. And then let's go into some of the extent of how much you focus in on the operation side, which then helps the deal perform and help keep your investors happy too. You were telling me about a story. There was a deal, I think it was Oklahoma, where you drive there on a weekly basis, and then you have all the cameras set up. Give us some insights into some of your way of thinking and also strategies that you use to make sure that you're able to perform, the asset performs.
Yeah, so this is very critical. I'm telling you guys, if you're an operator, if you have been there before, it's very difficult to asset manage a Class C value add property where it was mismanaged, you bought it from a slumlord, there's deferred maintenance all over the place. So what's very critical here is you need an excellent team. So first of all, you need a great property manager who aligns with you, who can see your vision, who knows exactly what your vision is, your underwriting is, so they can meet the objective. So before we go in, we have a meeting. We say, listen, this is my targets. This is the expense which we're looking at. We're gonna have weekly meetings and hit the KPIs. And I need your manager to be on the same page as me, your on-site manager, because the most important person is your on-site manager, because that will make you or break you. Because they only see the on-site manager, not me or not the person back at the office. So what happened was we agree upon this vision, this goal. And I said, are you willing to take on this extensive work? Because there's gonna be a lot of work for the first 6 to 9 months. Are you willing to take it and hack all this work? And if she says yes, then I will continue with her because she's done another deal with me. So I see how her integrity is, because it's based on integrity and work ethics. If you don't think that person integrity and work ethics, you don't want to hire that person because you already know that that's going to go downhill basically. So first of all, you have to make sure it's integrity and ethics and align the same vision. And you should do that before any deal. You should talk to them, interview them before any deals, and make sure you get referrals and references as well. And once she took on a deal, she worked really hard in the first 6 months from getting rid of the, let's say, bed bugs, cleaning up the pool that was all like green algae, bringing back the code from the city, having standards, like certain decent standards that you have to make it so it's livable. It's not trashy. And yet we budgeted a lot of money for it. We had just for cleaning up the outside was like $50,000 and all this landscaping and everything. And I over reserved because during that time was COVID-19. I over reserved more in case of the Black Swan event. But something else came out, a different COVID came out. So I was very cautious. I over reserved more than I needed. And we were able to eradicate quickly the bed bugs, the pool was cleaned up, the exterior was fixed. And whatever issues, we had tons of like work orders that had to be fixed. So systematic over time, we had to eliminate the work orders. So it took 3 to 6 months to systematic hit the priority ones. And then you also have to screen out who's causing the issue in your property. So every week we have a KPI track that says, okay, what's your major issue? Who's gonna be on an eviction list? Who didn't pay? Who do you believe is violating the rules? Like, for example, yelling, screaming, noise pollution, or even like they're doing like narcotics or something like that. So then we find out. So over time, you figure out what's discussed in the closet, and then those you gotta evict right away. So you have a strict policy. So how this work is that after 5 days you get a late notice. 15 days you get a post on the door. They say, you know what, I'll see you in court, basically. And that's how it worked in Oklahoma. We schedule a date, I'll see you in court, and then 2 weeks, 3 weeks later he'll be in court. And during this time, we had to think very carefully because we were trapped in this COVID-19 and they kept saying we had no money, we're hurt. So the city gave us a choice. Could you take them to court and decide on an iPad that we're gonna get the funds? So we told them beforehand, if they communicate with us that if you want the funds, you'll go to court, because the court would be like a 2-3 weeks payout versus 3 months payout if you just do a normal route of filing the form into the city. So we did that route. We got like $50,000 like in 1 month. So we covered all delinquencies. So we kept doing that, and it was evicting the ones that we think they were true like troublemakers, meaning that they disregard the rules. They weren't really finding a job. They were destroying the property just to show off or something. So those are troublemakers. We had to get rid of those. And then the ones that were really struggling, which we gave them help. The ones that seemed like they didn't seem like they couldn't find a job, and then we would decide on each case what we do with them strategically. And we took that from a non-performing asset to a performing asset in 1 year. And then 1 year and then like I think 1 year and a couple of months, we sold it. We made like around 50% cash on cash in 1 year and a half. And the reason why we sold it, because we bought it in 2020 December, we sold it like around a year and a half, maybe 2022, because we saw it running on a wall. The multifamily was going like this, right? See, right now it's a very difficult state for a seller because of loan to value, interest rate. So we saw that in the writing on the wall. We started selling all our multifamily assets last year. So that's what we did, basically.
Gotcha. That's awesome. And not only that same kind of care for you, that's the thing I notice about you as I get to know you more. Like the same kind of care that you have for your passive investors, for the assets, you also have the same kind of care when it comes to nurturing relationship with brokers as well. Because the bulk of your deals come from brokers, is that correct?
Yes, these were off-market deals. These that I done in Oklahoma City, because I nurtured a relationship. I convinced them by saying that, listen, I was a CPA master degree, and I know that if I can apply, I can get these deals, and we'll give you the same broker. I can give you the commission for over and over again, so that'd be great for you. He believed in me. He gave me 2 off-market deals. One was risky, one was good. So I got that one. That one I made almost 2.5x in 2 years.
Nice.
So that was really great.
Wow.
And the other one I told you was I made a year and a half, made a pretty decent amount for a year and a half, and seeing the foresight that we're in a decline, I had to sell it. So that was good. Because right now, if I had it now, I would have been stuck in a very difficult position too. So, yeah.
Gotcha. Okay. And so share with us some of your strategies around sourcing deals. And what asset class do you know? Are most of yours like class C's and D's, or what class are they in?
So those were class C value adds, but now I'm looking more like class B, and I do some class A as well these days. So I'm more class B and class A, but I do know in Texas, Dallas here. I'm in Arizona, and I help my students. I have 7, 8 students. I'm a coach for Michael Blanc, so I help my students do their local markets as well.
That's awesome. So yeah, so share with us, what are some of the strategies you go about when it comes to sourcing deals?
Yeah, so a lot of it's through broker relationship. What I do here is I have lunch with them. I talk to them once in a while, I have lunch, and we get to know each other at almost like friends. So we text each other, and then they tell me the deals coming. I know what's going on. So key is broker relationships, and another key is also is off market. So if you have a team or someone who goes off market, sends mailers or calls directly, or CoStar reports and know the owner, you could do a direct mail campaign, or you can call them directly and see if they want to sell. But I also like a broker because it's broker, they do the job and they help me source the deals. So it's a little easier that way. Otherwise, you have to do either you hire someone or you do yourself. You have to like send letters or call the owner and see if they want to sell. That's seems a little more difficult, but that's another avenue. So that's two main way that I source my deal. But once you do a couple of deals, the broker will believe in you and will actually source you the deals because they know who you are.
Gotcha. Okay.
Mhm.
And then what about social media marketing? Do you do much of that? Like LinkedIn, any social platform that you're active on?
Yeah, I do Facebook, I do LinkedIn, I have Instagram, and I have a podcast, so we post on there. I'm also obviously getting other podcasts. I speak in certain events, like Michael Blanc's events. So people know me through Michael Blanc because I was a student and a coach now. So that's how, and I go to a lot of events, like locally and sometimes of different
Right.
states.
Yeah, I do see you at events that I attend. Yes. And then,
Yeah, yes.
yeah, so your podcast, when did you launch your podcast?
This was 2 Novembers ago, so like not this past one, but the November 2 years ago. Basically, I launched a podcast.
Okay,
Yes.
gotcha. And what has the podcast bring to you? What kind of connections, what kind of leads, passive investors, sellers, brokers, like what type of connections has the podcast brought to you?
Yeah, the podcast means very valuable. It brought me a lot of guest speakers who I can connect with and kind of develop a relationship with, which I never can have a chance to before. It can also develop passive investors if they want to see what I'm offering, my deals. They're welcome to check out my website and book a time with me. It also gives me a platform because you need a platform in capital raising and also get your credibility up there, right? So if you see a podcast, then you write a book, then you see you have some kind of authority in your subject matter. There's more credibility to trust you more in investing in your deals.
Gotcha. Okay. So you use the podcast more. Would you say that the podcast for you has been more of a credibility tool, or do you think that it actually has helped a lot directly getting you the investors or the brokers? Yeah, attracting them. So not just for credibility, but actual leads.
Yeah, I think my podcast is a way for me to share my advice and tips to everyone to give back the advice for free. And also to build relationship with other guest speakers is one I always enjoy. It's like a hobby for me. I like talking to people. I'm like a social butterfly. I like talking to people and talk about their stories. And I do get some investors from my podcast as well. I do.
Gotcha. Okay, good to know. And then what other marketing strategies do you use to, whether it's to find passive investors or find deals?
Yeah, I'm part of the cash flow portal, which has a marketplace where I get automatic LP. It's like a matching system. So they match me with a GP and LP, and I get automatic leads from there. And then I send them an email, welcome to talk to me, book time and time to see if they're interested in my deals. That's another way. Another way is just going to meetups. I think it's very valuable. You go networking. My friend Trevor always networks, so he's really good at that. So you network at meetings in person. I think the best is in person, my advice. In person, have dinner, get to know them, and then if the values align and if they think you're a good fit, then maybe you consider talking about some deals. That's probably the best way I think to really find a passive investor.
Gotcha. Okay. And then what about like software tools? What are some of the software tools that you use in your business that you like a lot?
I use right now a cash flow portal. I have InvestNext. I have two portals, but I like cash flow portal because the support is great. And I've been using MailChimp as a setting up my emails. And right now I'm looking at a platform to expand my back office using Active Campaign and link into Zapier. So I'm looking into that right now. But right now I have quite a lot of people who I built up over the years that it's in my CRM.
Gotcha. Okay. And so do you have a marketing funnel that you set up that you send everybody to that has a lead magnet? Do you do any of that type of marketing?
Yes, I do. I put like a little thing where it says you want to learn about how to minimize taxes. And there's a little booklet they can, like, I send them an email and then they can read about it. And then they come, like, I get my email and that's how we do it. So my system will help capture everything, go my system.
Gotcha. That's interesting. Yeah, since you come from the CPA background, it makes sense that you attract them from the perspective of taxes.
Yes. I know a lot about taxes, so I love talking about taxes. Yes.
Yeah, that's awesome. Yeah, because I've interviewed a lot of different people, and like we all have our own journey, and so we tend to market to the people that we were that person in the journey before.
Yes.
Um,
Yes.
Yeah. So share with me. Let's talk about the taxes aspect of it. I was trying to come up with an idea of how can I create almost like a quiz that a passive investor goes through to identify based on their income, and possibly even based on their expenses, based on the amount of money they have to invest, that it takes them through this journey they should consider for their investment. So what I mean by that is, let's say someone who haven't started making good income yet, good income as in, let's say they make under 200,000, they're not accredited yet. And then, and then someone who isn't accredited, so they have good income, so that means that they probably have a bigger tax liability. So you get where I'm trying to go. I'm trying to figure out the journey or the levels in which an investor, a working professional goes through, and how we can then take that and almost create marketing message that appeals to them based on their levels. Have you thought through anything like that?
So my avatar is normally working professionals like myself, either in the business profession like accounting and the IT. And I think the way how I talk to them is, if you want some tax benefits to have tax loss in your K1, and let's say you have a single family house that creating some income, I can help you offset some of the losses through my syndication real estate that gives you paper loss, especially in year one, because cost segregation. So you can have lower income and less tax for your real estate income that you get. Now, if you are a realtor like EXP, if you're a realtor buying and selling homes, then you're a very risky professional because that's your primary job. Then you get the best benefit because you can offset your active income with the real estate losses. So you can pay lower taxes as a real estate professional. So that's one way I can tell my avatars, if you have that, then there's a great opportunity for you to invest and diverse from the stock market, come into syndication, which could be me as self-storage. I'm doing lately self-storages or monthly. And self-storage is recession resistant. And we use a lot of automation and tools that we can increase occupancy and compete very well what we do. So that's what I offer to my investors.
Gotcha. Okay, I understand. And then, so other than just general working professionals, do you target any specific professions at all? Like they're doctors or business owners or things like that? Is there a group?
No, I'm pretty broad because what happens is I get different investors. He's an entrepreneurial.com, right? That passion of creating an online company called Series A funding. Then I have another guy who's like, maybe he's an electrician. My buddy's an electrician. He invests at least $200,000-300,000 with me already. Electrician.
Oh, wow.
So he's trying to do his own business. So it's business owners like that and working professionals. So it can be different backgrounds.
Gotcha. I understand. Awesome. Yeah. What is your outlook on multifamily versus self-storage coming in the next few years with the challenges that you see in the marketplace right now?
Yeah, I think it's an opportunity within 6 months to 1 year, because I think we're in a very interesting time, because multifamily was going up like this. So it was a lot easier back then to buy a low rate and get appreciation because the market was actually climbing. So the market helped the operators, especially newer ones, and the rent was increasing. But now in this very difficult time where they increase it so fast in the history of America, no one saw this. Okay, there's two things they didn't see: COVID-19, and they did not see the rise in interest rates so quickly, which effectively hurted the economy and many commercial real estate owners. So you're gonna see a wave of crash coming within 12 months is my projection based on talking to my mastermind peers who is above me and who has done this for a long time. We're gonna see a opportunity that you've never seen before. So just be ready to buy these distressed assets where number one, maybe a new operator who took a bridge loan and had no interest rate cap, so they can't afford it. They're probably gonna foreclose unless they get rescued out. But there's some condition they can't get rescued out by lenders, so most likely it will be foreclosed. So you're gonna see those coming in commercials in general, not just multifamily, but it could be other asset classes. Office looks like a very weak asset now. Office space and all that's going down, and a lot of people taking office to multifamily. That could be an opportunity for operators who knows what they're doing actually to take the office and convert to multifamily, and that could be a good upside. So that's gonna come within the 12 months. And for self-storage, it's a little different story because a lot of self-storage people who are operating it well or decently well will keep it because these are like mom and pop. These are not normally like syndicators, like big groups that takes on these self-storage. If you're talking about smaller to mid-sized ones, they're like mom and pop. So they'll keep it unless they retire, unless or somehow at some point something happens that they let go. So that's a little different. But the problem is right now the interest is very high. So a lot of deals are not getting done. It's similar to multifamily because interest rate is high, loan to value is low. So there's a similar parity in that for self-storage. So they want a high price, but you can't pay that high price. So the deals are not getting done. So the broker's actually working twice as hard and getting less money. And that's what you hear from when you go to these meetups in Dallas and everything else. Oh, I just want to get a deal done in a multifamily. So it's difficult for them because they have to feed the family, but yet they can't get the deals because the last couple of years was easy for them. They can get deals done. It was very simple for them. But now these days, they actually work hard for the deals. So that's the difference.
Gotcha. No, that's a good point for sure. For the people listening, maybe they recently started out, they haven't been doing this too long, and they are getting discouraged in what they're seeing in the marketplace and getting scared by all of this foreclosures that are happening and stuff like that. What would you suggest to them?
I would say if you get educated and partner with someone who's experienced, like a mentor, and follow the footsteps, because then you can take advantage of some of these great distressed assets where in the past they'd had no interest rate cap or they ran out of reserves, like the Houston deal that recently foreclosed on Wall Street. That unfortunately gives us a bad name. And unfortunately, I don't like that because it gives a bad name. People who works hard and try to be honest and have integrity, it tainted us a little bit in a way where we didn't like that news, right? And so it's those kind of operators where you're going to see that there's opportunities, right, to come in and actually make it right and make it correct for your investors.
All right, awesome. All right, Jonathan, we're going to wrap up this part of our interview today. For the folks listening that wants to connect with you, learn from you, partner with you, where would you like to send them?
You could just go to my email. It's info@greystonecapgroup.com, and that's my email.
Okay, awesome. And then, of course, your podcast is found everywhere, and it's called Building Wealth in Commercial Real Estate.
Yeah, Building Wealth through Commercial Real Estate. Yes.
All right, awesome. Okay, Jonathan, thank you so much for doing this interview with me today. Really appreciate you. Yeah, it's been very educational, and I learned a ton about the diligence that you put in and the integrity in which you put into your business and your deals. I love that. Thank you so much.
Thank you, Tim. Thank you very much.